because not live.
All right, here we are. We're live with another business hangout for businesshangouts.net. My name is Derek Packard, and I'd like to welcome you to our hangout today. We're with a familiar face, Debbie Miller from Phases Accounting in Colorado Springs, Colorado. Debbie, how are you today?
I'm great. How are you?
I'm doing good. So what I wanted to do a hangout with you, Deb, on is tax preparation. We're getting down to that time of the year, of course, and I'm sure a lot of small business owners out there are wondering if there's any changes in what's going on this year, and we thought you'd be the perfect person to help figure that out. So just as a general overview, what do you see as the big changes for 2016 tax filing?
Well, unfortunately, there's a lot of things that we're waiting on Congress to decide as to whether or not they're going to extend them or not. But there are some particular things that we know are going to be extended, and those are the kinds of things we're going to talk about today. One of the first and most effective strategies for reducing your taxes, and that's what we're talking about, is how to reduce what you owe to the IRS. Keep more of it in your pocket because you worked hard for that, is deferring your income. And it has to do with a business, whether you are a cash basis or accrual basis. If you're a cash basis company, then deferring your income into 2016, you can do that by delaying end of year invoicing so that your payment's not received until 2016. Now, eventually it's all going to catch up with you, but we're talking about how we can reduce our taxes for 2015. So
okay, so wait a minute. So you're saying a good strategy is as you get into December, let's say, and you've got some invoicing to do, if you delay that invoicing till, say, January of next year instead of doing it this year, or in some way not collect money so you don't have to pay tax on it, basically?
Exactly. So if on a cash basis, you pay tax when you receive the money. So if you send your invoices out for your customers the last week of December, chances are they're not going to pay you till January. That would defer that income into the next year. However, if you're an accrual-based company, meaning you take your income when you invoice it, you would want to wait to invoice your customers till January 1st. And that's deferring that income into 2016.
Okay, that makes sense. What else have you got?
You can also, one of the things that we're trying to wait on Congress to decide is about what we called 179 equipment expensing. It allowed you to depreciate so much equipment the year that you buy it. So that's a way that you can spend money to save money on your taxes. Now, one of the neat things about this strategy is, let's say you said to me, Derek, I'm going to have a $10,000 profit, Debbie. How can I wipe that profit out? You could go buy $10,000 worth of new computer equipment, put it on your credit card. As long as you charge it on your credit card before December 31st, you could write that whole $10,000 off in 2015, even though you don't have to pay your credit card until January. Okay. Now, you have to have profit of at least $10,000 to do that, because we're deducting $10,000. I hope that makes sense.
Well, okay, so you're saying you do a trial run and see what your net profit's going to be for the year, and you're seeing, like, say I'm saying a $10,000 taxable income. So you're saying that instead of paying the tax on that $10,000, if I was needing to buy equipment or was planning to buy equipment in the next few months, might be good to just go ahead and buy it then on credit card. So I'm taking that as an expense for 2015. But then because it's on the credit card, I wouldn't have to pay that bill until January.
Correct. Well, or whenever the credit card bill is due.
Right.
It can go up to $25,000. So you could buy up to $25,000 worth of equipment and write that off.
Okay.
It used to be $250,000, but they don't want us to have any great deductions anymore.
Uh-huh. So is that the $25,000 is kind of a ceiling on that?
That's the max that you can deduct in full that first year, yes.
Wow. So some bigger companies, that doesn't help them too much.
Not too much, but for small business, it's usually significant. And you also have to weigh the fact of whether or not you have profit. So it's really important to meet with your accountant or contact Phases, and we can help you do a year-end tax estimate. And that's a good use of your time. It's a smart idea anyway.
Okay. So what about, my big question is always about the healthcare, Obamacare, and how that's impacting small businesses. What can you tell us about that this year?
So the small business health care tax credit, that's a mouthful. If you are a small business with less than 25 or less employees, then you can take a credit of up to 50% of the amount of money that you pay for their health care costs. And that's across the board. You can do that throughout the year, or you can do it at the end of the year. The tax deferring strategy to that would be, hey, if I have to pay my employees' health insurance for January and I want to accelerate my deduction, I could pay that in December instead of paying it in January. But you get to take up to 50% of that amount that you pay for their health care costs. Now, I'm not sure a lot of small businesses understand that. A lot of people have kind of turned a deaf ear to the Health Care Act. A lot of people who come to see me, they just don't really understand that if they are paying some of that, then they can deduct up to 50%. So that's kind of nice.
So what surprises me when you say that, so I have 3 employees and I decide I'm paying all their healthcare costs. That's not just an expense for me like any other expense. I can only deduct 50% of that?
No, this is a tax credit. You get to deduct 100% of the expense, but you also get to take an additional 50% tax credit.
Oh, so
almost double dipping.
Oh, really? Okay. So that is a big plus for small businesses.
Right. And I think a lot of businesses, they're not paying their employees' health care costs because they're afraid, or they just don't know what a great benefit is for it. It's a great way to keep employees, although health care costs are kind of high now. So
yeah. So if I'm paying one of my workers and their health care cost is $1,500 a month, and let's say I'm paying 1,000 of that, and they have to pay 500. So I'm expensing 1,000 a month towards their healthcare cost as a business expense. And I did that for 12 years or 12 months. So that's $12,000. And then at the end of the year for tax, I get an additional $6,000 of tax credit.
Yes.
Wow. And then if I pay January's to get ahead of the game by a month, say I need an extra deduction, that would be an extra $1,000 for the payment plus another $500 in tax credit.
Yes.
Oh, okay. Wow, that's a good one.
Now, the tax credit, remember, it's not refundable. So if we've already written off all your profit by buying that equipment, then you have zero profit. The tax credit's not going to help you. So that's why tax planning is so important. We don't want to do stuff just because we heard it on a video. We want to make sure it's the right choice for us.
Right. Okay. Gotcha. All right. So things are getting complicated enough where it really does make sense for people to have someone like you that they can talk to if they have any kind of reasonable size small business.
It's important if they have any small business. The IRS has hired 8,000 new auditors, and their primary target is self-employed small business people who are self-preparing their tax returns. TurboTax isn't going to tell you all this stuff.
Okay. All right. What else have you got?
So another really big one that has been around for a lot of years, but most people don't know about it, is another tax credit, and it's called the Domestic Production Activities Deduction. I'm sorry, it's not a tax credit, it's a deduction.
And what is that?
It means that if you're in a business, this is a little bit.
We're hearing a little kickback on the audio, Derek.
That sounds fine here.
Okay, good. So this is for domestic activities, domestic production. So let's say your business is building decks. If you build decks, then you build them in America for your clients, then you are doing domestic production, and you can take a deduction, for those extra expenses that you might have. And in the state of Colorado, which is where we are, we get an extra tax credit for having domestic production. So that's something that a lot of people don't understand. It's not the greatest one. That's why I said it fourth instead of first. But
Right.
it is something. So if you are doing some sort of production in your business, creating something that you're selling to people in America, has to be selling to in America, then that's something that you definitely need to talk to an accountant or call Phases, and we'll talk about that.
So give an example of that, how that might work. So people, it's even hard for me to understand. Give an
If you
example.
build a deck, Derek, your business is creating videos, so you're actually producing videos. I don't produce anything. I'm a service industry completely. So I'm not building anything or selling a product. If you build a deck, if you remodel a bathroom, it's a really good one for construction, guys.
Okay, so I remodel a bathroom. How does this help me?
You get to take a tax credit depending on what state you're in. So that one is one that I would rather you call my office and have a free consultation and talk about your specific situation.
Okay. All
Don't
right.
try to do that one on your own, for sure.
Okay. What about for those folks that are like myself, we're not in our first phase of business, but we may be getting close to retirement. Any tax issues in regards to retirement planning?
Yes, the retirement plan deduction is really a great thing, because as long as you have your retirement account set up and established by the end of 2015, you have all the way until you file your tax return to fund it backwards. So the neat thing about that for tax planning is we can do all of the creative things that we can think of, figure out how much money you can afford to put away, and we can wait until you get your tax refund and use that money to fund that deduction backwards. So that's a really good deal.
All right. Excellent. Now, you mentioned earlier about Congress and the fact that they hadn't decided yet. Are you saying that there hasn't been the tax laws for next year in terms of specific deductions or loopholes and all that literally is not a matter of law at this point?
Most of them are not. Most of tax code is a matter of law right now. There were some things that expired at the end of 2014 that they were trying to decide whether they wanted to extend them to 2015. They haven't made those decisions yet. They're mostly based on that 179 business equipment expense deduction that we were talking about. So in 2014, remember I said it was 250,000. At the moment, they've said it's only 25,000. They may decide at the end of the year or before taxes are due that they're going to let it be 250. We don't know. And if so, they would extend that backwards. But unfortunately, it won't help you because they won't decide till January or February, and then the year end is already over. So it's not really much help. The strategies that we've talked about right now, these are the ones that are going to help you right now. We can count on those. We can maximize your deductions and keep that money in your pocket.
Excellent. So Deb, let's review for small business owners just 2 or 3 reasons why the small business owner should work with a tax professional.
Well, first, the IRS hiring all those extra auditors, you are prey. And they are going to balance the budget on our small business backs because all the big businesses have a bevy of lawyers that are protecting them. So you really need to have somebody who deals with these things every single day. The second reason would be if you do have an audit or you get a notice from the IRS. We have tax preparers that are registered. We have access to hotlines where we can get through to the IRS faster than you can. And I've seen it. They deal with a customer, a regular taxpayer. They treat you much differently than they treat a tax preparer when they're talking to them. They sometimes, you don't know what kind of attitude they're going to have. They may have had a bad day. They may yell at you. I had a client the other day who called and said the lady scolded him for 10 minutes for not paying his taxes. And I got on the phone and her attitude changed completely because they're not allowed to act that way.
Oh, wow. Okay. Now, Deb, I'm putting up a graphic with your website. This is at phasesaccounting.com, and people can go there and get more information. I see they can click and download their tax kit. And let's see, is
We'll
there
have-
a way where
We'll
they
have the
can
new
actually?
tax kit. We'll have the new tax kit up there in the next couple weeks. That's the old one from 2014. You can also go on there and register to get our email newsletter every month. That's got a lot of information. It's got information that we've talked about today on there, a lot of tips and a lot of deadline dates and things like that.
Okay,
Or
excellent.
schedule an appointment.
Right. Yeah, they can actually book or call you and book an appointment to come in and see you. Or now I understand you're doing a lot of business online now from other states as well. Is that correct?
We sure are. Thanks
How
to
does that work?
Hangouts.
How does that work?
You can go right on my website and schedule an appointment, and we can do a Skype, or we can talk on the phone. We can do email back and forth. We have a secure client area where you can upload documents to us, and we can upload tax returns back to you. With the world of the internet, the world is a very small place now. So we'd love to have you. We can do tax returns in any state. We're very experienced in all aspects.
Excellent. All right. Well, thanks so much, Debbie, for giving everybody just updating them on what's happening. This is Debbie's website again. My name's Derek Packard. This has been another businesshangout.net, and it's been about tax prep tips for 2015 for small businesses. We'll see you next time.